Welcome back to my morning report chart analysis videos on Friday the 20th of May with me, Richard Bear, market analyst at Antec Markets. Moving on to Eurodollar now, and we've seen this sort of correction in the Eurodollar just starting to sort of find a little bit of support potentially. We saw a posted low at 11.78 yesterday, and since then we just rallied about sort of 30-40 ticks. Nothing too significant in terms of support, but there are sort of initial signs that perhaps there is a near-term rally. But when I say near-term, it would be sort of intraday, because you've still got this trend of correction. You've still seen over the past 3 weeks this sort of sequence of lower highs, lower lows, pulling the euro lower. 12.13 was that April low. That's been breached on a closing basis as well. So theoretically, you'd argue that that sort of now certainly opens up at least the 11.42 March low. But I think ultimately the long-term pivot between 1050 and 11 figure, these levels here on the long-term chart, I think they could well be where we're coming back to, because if you look at the momentum indicators, RSI in the 30s, that's not great. Stochastics oversold. Now the argument would be, I suppose, are the stochastics bottoming? Well, until you get a confirmed crossover buy signal, I think I just treat that with a little bit of caution, rather than going into buying this, because I think ultimately little rallies are being sold into on a continued basis. So you look at the sort of resistance that you're getting on Eurodollar, and you'd say, well, you've got this band of resistance ultimately from Wednesday's trading, just prior to the Fed minutes, 12.54 up towards 12.92. And then you had the Fed minutes, that was this big candle here. So I think that would be a resistance in place. You got 12.80, which was that old low from the 13th of May, up towards 13.47, which was this high here on Tuesday. So I think ultimately we've got sort of a continued sequence of low highs, low lows, and I think that rallies are going to be sold into. You could argue 12.30 is an initial resistance, and you could also argue if you break through 12.30, that sort of forms a little bit of a base pattern, very small one, sort of would give you 50 ticks of upside, and again that would drag you back to 12.80. So it's possible you could see a rally into this sort of resistance band, sort of 12.50 to 12.90, and I think that would be probably a decent chance to sell. So if you saw that today, I think maybe that would be where you'd be looking out for. But looking at this hourly RSI, it's already sort of into the sort of 50s, close to 60, and that seems to be where the rallies fall over throughout this this sort of selling pressure that we've seen in the last 3 weeks. 60 seems to be the limit, although you did have this minor breakout on the 11th, but that ultimately proved to be fruitless and turned lower, and now we're subsequently sort of finding resistance on the RSI around that 60 point again. We're currently in the mid 50s, so maybe you've not got too much more upside. You've also seen the MACD lines are unwinding towards neutral, stochastics also back towards levels sort of just under that 80 point. So you're sort of not a million miles away possibly from the next selling zone in terms of technical signals anyway. So it's still in this sort of downtrend phase of correction, and having broken below that April low, I think you're still looking at selling into strength and the likelihood of a retracement back towards 110.50 to 111 figure. So I wish you good luck in your trading today on Euro, and I'll speak to you later. Thank you.